Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's video, I'm going to give you quite a number of charts and quite a lot of different reports because there's so much going on at the moment that we need to just get into the video and go through each individual item and make head and tail out of that. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. Okay, before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. Nothing should be taken as financial advice. So please do your wider research before you make any investment decisions. Okay, so I'm going to start off with the monthly chart and the chart that I've been showing you for many months now. And that is, it basically divides the chart into the halvings, which is the pink lines here, and also the cycles. So this was the first cycle, taking us up to the 2014, and then the second cycle up to 2017, and this cycle up to 2021. And now we're in a current new cycle, which will take us up to the end of 2025. The main question on everybody's lips is that have we actually bottomed out and come to the end of the bear market? And I wanted to answer that question by showing you something very interesting. If you take the first cycle up to the 2014, we bottomed out here originally at around about November 2011. And if you take the bottom from there to the bottom of the next bear market, which was here in January 2015, that was about 38 bars, i.e. 38 months from one low to the next low. And if we go to the next cycle, from the end of that bear market to the end of the next bear market in 2018, you can see that was 47 bars, so that was extended a little bit, but you can be forgiven for thinking that obviously at the beginning of a new asset class, things are going to behave a little bit more erratic and move a little bit more faster. But this is where it gets interesting here, because if you take the next cycle from the 2018 to the current cycle, the low that we got at 15.4 was also exactly 47 bars. So you can say with a high degree of probability that we've either bottomed out or are about to bottom out. And we'll have a look at the lower time frame charts to give us a clue as to what's exactly happening and whether this 15.4 really is the bottom and that we're now at the beginning of the next upturn. And for me, it's all about the risk-reward ratio here. So the risk to the downside, I would say, based on these bottoms in the previous bear markets, the risk to the downside seems very minimal, whereas the potential for the upside seems incredibly high. So for me, this is a great opportunity. And as I've been saying for many, many weeks now, I've been dollar cost averaging in from the 17.5 level right down to the current levels. So for me, the risk reward ratio is so much in the favor of going to the upside that I'm not really too worried if we take one more downturn before we do that. That will help me not to miss the big move to the upside, which I've been talking about for the last many videos now. Before I move on to the next chart, I want to actually bring your attention to a little bit later on today, in a couple of hours time from where I am currently making this video, at around about 1:30 UK time, which is 8:30 Eastern time, then the CPI data in the USA will be coming out. And just to bring this to your attention, what the expectations are. So as you know, we topped out in the inflation figures in the USA at 9.1% back in June last year. And currently, in the last few months, we've been going down to 8.5, 8.3, 8.2, 7.7, and last month it went down to 7.1. So the expectations, obviously, with this trajectory is down to around about 6.5 for later on today. So if we come in better than 6.5, i.e. 6.4 or lower, then it looks like the markets will have a big turn to the upside, at least for the very short term. However, if we did come higher than this figure, then it may well be that the current rally that we're having may come to a little bit of a resistance and have a little bit of a pullback in the short term. But as long as the figure is showing a good trajectory to the downside, for instance, if we come out for 6.6, I don't think that's much of a disaster really. So look out for the figures very shortly in the next couple of hours, and that will trigger some sort of a response in the markets. So you might see quite a lot of volatility immediately before and after the figures come out. Okay, so I want to move on to the 60-day cycle, which I've been showing you for the many videos now. And we get so much information from these 60-day cycles that it's actually very useful in giving us a template of where Bitcoin is heading in the short and the medium term. So I've been saying in many videos, if you've been watching them, is that this is a right translated cycle, which basically tells us that after the midpoint of the previous cycle, from this point here to this 60-day end here, this point that we got at 18,300, which was after the midpoint of this cycle here, the first cycle I've been showing you here, that told us a clue. As I said that many times as I was doing those videos, that means that's less days to come down here, and that the 60-day low would come into this 60-day point around 8th of January. And the expectation was that when we got to this point here with this candle, that we may still get a low down here, which would challenge the 15.4 and the 15.5 over here. But I also said that if we don't do that and we did this instead, then that would be incredibly bullish and maybe the signal for the end of the bear market, with these two as the low point for the bear market. So this is exactly what it's done here, which is that instead of making a lower low into the 60-day cycle, what we've done is we've actually bottomed out at day 51, which is incredibly bullish because we haven't done that in the last 12 months on these 60-day cycles. They've been elongated to the downside, whereby they've been left translated, i.e. they've been topping out before the 30 days and finishing after the 60 days on most of the occasions, which means they've had a lot more days going down and therefore ending up with lower lows and lower highs along the way. So this is a nice turnaround that we've had recently. So what do we make of this move that we've just had now in the last night? If you've been following me on Twitter, you'll know that I've been mentioning these various candles. This was the inverse hammer candle over here, which is really a rejection to the upside here, which means that this is very bearish, and normally with a long wick at the top and a hammer here, some people call this a shooting star, whatever you want to call it, what it really means is that the bears have come in and pushed the price all the way down. They're not prepared to pay any more than the top of this wick here. However, if we break this wick, that tells us that there's a lot more buyers in the market who are prepared to actually put their money where their mouth is and actually take it above this point here. So when this broke, this candle, when this candle broke above this inverse hammer candle, I mentioned this in the follow-up tweet, then my next test was going to be 18.3, because this is incredibly bullish to actually close the day above such a big candle like this with a strong bias to the downside. So instead of playing to the downside, it closed above it, which tells you that the volume is increasing and people are prepared to pay higher prices irrespective of the downside bias. And then last night, this candle the previous day was then followed up by exactly what happened, i.e. a retest of the 18.3. So last night, about 11:45 UK time, I saw this breakout happening up to the 18,000 level here. And this morning when we woke up, this had reached 18,375. So the narrative all along has actually played out very, very well according to the 60-day cycles. That once we found that this long wick at the bottom, and I mentioned this particular candle in the tweets, back on January the 1st, I mentioned this particular candle here, that a break above this candle signals an early end to the cycle and the start of a relief rally of a new cycle. That the Friday Bitcoin price closed on a bullish hammer candlestick, indicating a potential price reversal to the upside while going into the weakest part of the 60-day cycle. So this was incredibly bullish. And I mentioned this if you were following me on the Twitter. And if you want to follow me on Twitter, where I post quite a lot of bits and pieces about what's happening currently in between my videos, then go below any of my videos and you'll find a link to the Twitter page there. So where do we go from here? We've now hit the 18,300 mark, which was this resistant point from these levels. And if we go left, you can see these were the support lines, which basically have now turned into resistant points along here. And many people are expecting a pullback from these levels. And it all depends really on the CPI data coming out in a couple of hours' time. If we get a good set of data, i.e. inflation figures below 6.5%, we may have another leg to go up. And as you can see quite clearly, the next level, we just fell straight down here. So there's no support levels on this price action here, although there will be some over here. So you could get to around about the $19,000 mark, but the main level to look out for is this one here. at 21,400. As you can see, if we move left from here, if we put a horizontal line at this point at 21.4, we can see there's a huge amount of resistance here, resistance, support, resistance, a lot of price action here, and again resistance over here. So there's a very strong probability that when we come up to these levels, anywhere into the 30-day halfway mark of the current cycle, this is where we are, this is the cycle we're in, from this one, which was a 30-day cycle, but obviously that closed. So we now need to take that one out. So that becomes the beginning of our new cycle after 51 days. This becomes our new midpoint around about the 29th of January, so the end of the month. And we're now on a new cycle. So we're now coming into the midpoint of this cycle, which should end around about the 28th of February, i.e. end of next month. And if we can make a right translated cycle here as well, that would be incredibly bullish, because what that will mean is that if we can get up to, let's say, the 21,400, then I've drawn this trend line here, because this is quite a strong trend line with number of points. As you can see, there's 4 very strong points along this trend line. And it looks to me as that will become the pull, that when we do pull back from maybe the 21,400 into the next 60-day cycle low down here, we would use this 18,300 as then the support. So we should then have broken the resistant point, tested the next resistant point, and come back and found support on the previous resistant points here at 18.3. So look out for that in the next few weeks. That's what it looks to me as though the price wants to do for Bitcoin. And of course, if the CPI data wasn't very good and we did have a pullback, then this would be a good pullback to this price level here at around about the $17,000 mark here. It is looking increasingly unlikely, with all the bullishness that's taking place here, that we'll go down to these levels at 15.4 and 15.5. There is a feeling in the back of my mind that this 18,300, because everybody's expecting a pullback from here, because of these levels numerous times over here, because everybody's expecting a pullback here, the market has a way of trapping people. So while there'll be a lot of shorts over here, I think the probability is that we're going to get good data and that we're going to use this as a support for the next leg up to the 21,400 level. The main thing is not to get trapped here. And just a little word about my strategy of investing in this part of the bear market, and that is that I'm a long-term investor here. I do have a trading portfolio, but my major positions, all my positions now for investments, are now fully in from last Friday. So I'm fully in, even though there is still a risk that this could go further down, but the risk reward is much in favor of the upside rather than the downside. And we must be mindful, obviously, of the downside. But for me anyway, my strategy has always been that get full positions in. All my core positions are now in around these levels. And I just want to ride this up to as far as I can. And I will make some strategic changes along the way where I see possible, but certainly for the next 2 years, most of my positions will be for the longer term in that period of time. So I hope you found value in that. And if you did, then please do remember to like and subscribe if you haven't already done so. I'm going to move on to the Bitcoin miners now. And I want to show you the Bitcoin miners portfolio that we started in the last video. And we're going to continue this portfolio for the next 2 to 3 years. So what I've done is I've actually made some minor adjustments to the portfolio. It was actually denoted in pounds, but because I've realized that most of my subscribers are actually outside of the UK, so in order to keep everything neutral, I've made the currency here to be the dollars, and I've also made the starting capital instead of 10,000 into 100,000, so that we can have a target of exactly 1 million in 2023. That's what we're going to try and aim for. And it is very possible, it may not look like it at the moment, but I can tell you that this target was very easily met in the last bull market. And we'll have all the evidence in front of us here in the next 2 years, so we can see that we'll get this starting capital of 100,000 and turn it into our target of $1 million by the end of 2023. And we're going to do it with these miners here. And I gave you these lists and said that I'm going to divide it among my favorite 8 companies here, and I've been allocating the funds to Marathon and Cypher, which I think are going to be the 2 fastest horses. Please remember, this is not financial advice. I don't know what I'm going to have for lunch, so I don't even know what Cypher is going to be doing. But based on my knowledge, based on my charts that I've been reading for all of these companies, based on their information they've provided on their website, I've come to the conclusion that Marathon and Cypher are the two fastest horses. So I've allocated $20,000 each on to both of them. And the rest of them, Riot, Clean Spark, Hut 8, Bitfarms, Iris Energy and Mawson, I've actually allocated $10,000 to. So I took the prices that I'm going to be buying at here, and these prices reflect this chart I showed you of the closing prices on that day. So since last week, these were the prices then, and these are the current prices at yesterday's close. And the profit and loss, you can see quite clearly within a week, these are extremely volatile, extremely risky shares. So please don't take this as me saying to you, you must go and buy these. I'm not saying that at all. I want to categorically say, if you're of a nervous disposition, these are the worst stocks you can get into. If you have a weak heart, this is not what you should be going into. I'm only reflecting of what I buy and what I'm into. So this is one part of my portfolio that I have. This reflects my portfolio that I actually have. Obviously the figures that I'm investing in are different to these because this is a fictitious portfolio, but I'm going to show you that with this portfolio, with these miners, where the real potential is. And currently, the current price at yesterday's close were these prices here. And so far, as you can see, we're showing with Marathon 27% and Cypher 53%, and that's the best performing stock over the last 7 days. But Riot has done really well with 38%, Hut 8's done very well with 23%, and Bitfarms also with 36%. The laggard at the moment is Clean Spark at 9% and Mawson at 15%. But these will be changing, so in every video I'll show you where we are and where we've progressed towards our target of $1 million by the end of 2023. And these were yesterday's prices that I took. So if you look at these closing prices, that's what I've done over here and taken the closing prices from yesterday. Okay, so we'll leave it there. I hope you found value in the video, and if you did, then please do remember to like and subscribe and to turn on the notification bell. I'd be very interested to know what your views are on this miners portfolio that we'll be following for the next 2 years. I just wanted to show you the potential of these miners over a period of 2 to 3 years. If we have the patience, then there is a lot of money to be made on these here. And if you want to follow me on Twitter, then please remember there is a link at the bottom of all of my videos, and you can catch me on Twitter in between all of my videos here. Okay, until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.